Good day, everyone. This study examines market demand and investor behavior in digital gold and silver investment platforms. It is based on a PRISMA guided systematics review. This goal is to provide a structured understanding of how digital precious metals are evolving in modern financial market. Gold and silver has been used as safe haven assets. Investors rely on them to protect wealth, especially during inflations, economic instability, and financial crisis. Recently, financial technology has transformed how investors assess these assets. We now see digital gold, tokenized metals, and gold-backed cryptocurrencies. These innovations allowed investors to trade and hold precious metals through digital platforms. This shift has created new opportunity but also new uncertainties. Despite growing interest, the evidence is still unclear. Some studies shows that digital gold works as a hedge and diversification tool. Other studies show weak or inconsistent results. There is no clear conclusion on whether digital gold can truly replace or match traditional gold. More importantly, research findings are scattered across different topics and approaches. For the research gaps, existing studies tends to focus on isolated areas. Some focus on hedging abilities, others focus on demand or pricings. There is no integrated review that combines these dimensions. In addition, investor behavior and regulatory issues are still underexplored. This creates a gap in understanding the full role of digital precious metal. This study aimed to address these gaps. First, it synthesizes existing research on market demand and investment trends. Second, it identifies key drivers such as economic uncertainties, inflations, and geopolitical risks. Third, it evaluates the hedge and safe haven property of both traditional and digital assets. Fourth, it examines investor preferences. Finally, it identifies research gaps for future study. For methodology, this study uses a systematic literature review approach. Specifically, it follows the PRISMA framework. PRISMA ensures a structured, transparent, and replicable process. It helps reduce bias and improve the reliability of findings. The review focuses on both traditional and digital gold and silver investment. The process started with 82 studies from database searches. An additional 92 studies were identified through citations chaining. This resulted in a total of 174 studies. After screening titles and abstracts, 99 studies were retained. Finally, 50 high-quality studies were selected for detailed analysis. This process ensures that only relevant and reliable studies are included. This diagram shows the PRISMA framework diagram. The selected study has used advanced econometrics methods. This includes the vector autoregression, corpus models, and quantile regressions. These methods allow researchers to analyze complex relationships between precious metals, financial markets, and macroeconomic factors. The study also covers both developed and emerging markets. This provides a broad and comprehensive perspective. Key finding for the demand drivers. The review identified several key drivers of demand. Economic policies uncertainties play a major role. Inflation expectations also drive investors towards precious metals. Geopolitical risks and financial market volatility further increase the demand. In simple terms, When uncertainties rises, investors move towards gold and silver to protect their portfolio. For the key finding, hedge and safe haven, gold remained a strong hedge and safe haven asset. It performed well during financial crisis and market downturn. Silver also provides diversification benefits. However, its industrial use make it more volatile. This means silver can complement gold, but it is less stable as a safe haven. Key findings for digital gold. Digital gold offers several advantages. It provides easy access and flexibilities for investors. It also supports portfolio diversification, especially in digital market. However, its hedging ability is weaker than physical gold. Its performance depends on market condition and the types of crisis. This makes digital gold less reliable as a consistent safe haven. Investor preferences vary across groups. Traditional investors tend to prefer physical gold. They trust its historical stabilities and liquidity. Tech-oriented investors are more open to digital gold. They value accessibility and integration with digital assets. Digital gold is particularly popular in cryptocurrencies portfolios. Factors such as trust, technology adoptions, and market conditions influence these decisions. For the discussion part, these findings show a clear pattern. Traditional gold remain the core safe haven asset. Digital gold acts as a complementary tool rather than a replacement. Its role changes depending on the crisis and market environment. This highlights the growing complexities of modern investment strategy. For implications, okay, in the perspective of investor, the strategy is clear. Use gold for stability and protection. Use digital gold to enhance diversification. For financial institutions, there is an opportunity to develop hybrid products. This can combine traditional and digital assets. For policymakers, regulations is critical. Clear frameworks are needed to ensure market stabilities and investor protection. This study has several limitations. First, digital gold is relatively new, so long-term data is limited. Second, different methodologies across study make comparison difficult. Third, data availabilities for digital assets is inconsistent. Finally, behavioral and psychological factors are still underexplored. Future research. Future studies should focus on long-term performance of digital gold. There's also a need to examine investor behavior in more depth. Key factors include trust, risk perceptions, and technology adoption. Regulatory framework should also be studied across different countries. Finally, future research should explore how digital gold interacts with cryptocurrencies and financial market. To conclude, gold remains the strongest safe haven assets. Digital gold is growing, but its performance is inconsistent. It works best as a supporting asset in investment portfolio. The relationship between the traditional and digital assets reflects the evolving financial landscape. More research is needed, especially on behavior and regulations. Thank you for your attention. This is the end of my presentation.